Commodity funds went from being the in thing 12 months ago to being distinctly out of fashion at the moment. Africa's role in the commodity cycle also looks increasingly uncertain, with large amounts of iron ore and coal about to come on stream at a time where demand for resources seems to be waning. Portfolio manager Bruce Williamson from Imara Asset Management joins us in studio to give us his thoughts.
Bronwyn, yeah, we just wanted to get Bruce to comment. I think we were talking off air about how quickly the sentiment for resources has changed. Just take us through what you think is going on at the moment and why, if this is a great opportunity to buy resource stocks, or why you're going to sit for a little while and wait.
Yeah, I mean, I think we have to look back and recognize that middle of 2011 there was a big top. Upward momentums were really strong, really high, and that is when I first said to myself, I think we're at a top. And since then, the economic news, particularly in the West, has been poor. Economies are sluggish. I mean, QE and Japan have now joined. There's very little growth, and so everyone's hoping and praying that China comes to the party. Well, China can't hold this whole market up together. So what we've seen over the last 15 odd months is just this continual weakening, and with that, equity investors just left in droves, and particularly this year, I mean, it's been harsh. Week by week, the shares have now been pounded down, and especially where we as Imara, with the African Resource Fund, invest in African resources. They listed companies in the four big listed markets, Toronto, Aussie, AIM, and here. But yeah, they are particularly weak. Equity investors are not there supporting any fundraisers. It's really tough.
But it seems as though everyone's been scared by the GDP number, first quarter GDP number out of China at 7.7%, which is still very robust. I mean, the market was only expecting 8%.
Absolutely, and I mean, I've just shown people in just nominal numbers, 7% today compounded after the last 10 years is an extremely big number.
It's phenomenal.
So
it doesn't mean that demand has vanished for commodities across the board.
Absolutely, it hasn't vanished, but the rest of the world is flat. And there's been a bit more supply coming here and there, but prices got really high, and that's where we had to recognize that prices were too high and they've pulled back. Where's the turning point? I just go back to historically, for resources to turn, figuratively, you need blood to flow. That means you've got to have production cutbacks. That'll give the market confidence that we've cleaned things out.
Bruce, we've got, we're talking off air again, and obviously you talk about that lack of support for resource stocks at the moment. One of the biggest funds in the country, the Allan Gray Equity Fund, they published their commentary today. They're unconvinced that the situation that we find ourselves in, where there's so much inflexibility around some of these mining companies and being able to right-size their operations, as well as the attitudes of Labour and government combined, have just not provided the environment to pick up some of these resource counters. So I wanted to ask you specifically around South Africa. You know, is it too inflexible, even after these shares have been hit down as hard as they have, to pick up these companies?
Yeah, there's a good number of factors that are affecting it, and labour is definitely one. Power is another issue. But again, understanding that industry is that our deep level gold and platinum mines, it's really, really tough. There's long travelling distances to get to the workplaces, obviously heat, seismicity that go with it. Since the Imara African Resource Fund was created in January 2009, I have not touched our big gold or our big platinum for that reason. Now, if you add on top of that inflexible labour, my feedback now, it's very, very difficult to manage these companies because labour is so involved in some really, really big decisions. Not the case with gold, but if you need the platinum market to turn, historically we have seen big cutbacks. Impala and Rustenburg Platts in days gone by could cut back by 20-25%. That tightens the market. Now, given the labour situation and the unemployment situation in this country at the moment, they don't have the luxury of doing that. So there's a lot of pressure not to cut jobs. Well, then you can't tighten this market quickly. And that means these guys are going to battle. So as an equity investor, I have just been right out of those type of stocks since we started the fund.
I think that's a big call. I mean, we've seen some of the value managers buying the likes of Amplats and the other platinum producers. But I mean, how far would they have to fall before you decide to invest, or are you waiting for the platinum market to correct?
Yeah,
from the
it's
supply side
not so
before you
much
do
a
that?
case of how much further they need to fall. It's a case of how quickly you get the fundamentals, demand and supply, back into the market that then look attractive. And reality is, cutting production is the quickest way we're going to get the market back on an even keel. What I did, and a lot of people would say it was too much risk, is I've rather been sitting holding Zimplats, because if you look at the fundamentals of the operation as a mine,
But
absolutely
doesn't that
brilliant.
come with its own risks?
It comes with its own risks, but if you look at it, Zimbabwe's risks are pretty much known, and they're right down there at the bottom. Where are South Africa's risks at the moment?
So you're saying it's the uncertainty that is making
So we
you...
are maybe only halfway down the ladder in terms of the uncertainty. We really need to get management, labour force, government working together. Productivity and efficiency is the name of the game, and no one is addressing that issue. So I was more comfortable saying, I understand Zimbabwe, but I'm talking about a top-class operation with fantastic upside potential. So I've rather been happy to sit waiting in Zimplats than trying to second guess what's going to happen here.
I don't know about you, Bronwyn, but that's the first time I've heard an equity manager telling me he prefers Zimbabwean risk to South African, but I guess this is the kind
I
of
think
the
it
state
shows
of
the
affairs.
severity of the situation in South Africa, Bruce, and
Yeah, absolutely. I've been watching platinum shares since the early 80s, and at times they are wonderful, wonderful investments. You buy them at the real bottom when they've cut back production. The market thinks they're at, say, 100, which is 70% of their capacity, and once the economies turn again, they go from 70 back to 100. Now that is terrific operational gearing. You get cost benefits when that happens. That's the fun of buying South African platinum shares, is when they're really down and out. We down at the moment. I just don't think we
We're out.
completely.
you don't think we're down enough to warrant buying in. That's what you're saying.
Yeah.
And by default, Bruce, you're also saying that you don't think Amplats are going to be able to restructure their business in the way that they wanted to
Yeah.
before this whole thing spilled out into the public domain.
No, absolutely. I mean, when as a young guy working on the gold mines, we used to see when some of our good labour would leave the gold mines and go and work on the platinum mines. When the US auto industry turned, they needed more people in platinum, and off they would go. When the downturn came in platinum, that labour would just come back to gold. And in the 70s and 80s, there was an opportunity to go to coal because we had an expanding gold and coal sector. Now, gold, you just mine at capacity. You don't go up and down. Platinum, you're going to have to tighten that market, and they can't do it now.
So let's go back to gold. Is there any merit in investing in gold?
Yeah, sure. I mean, again, it's timing. I think what happened what I try and do is not have to worry too much about the gold price or the rand or any other currency. I want to go and look for guys who have found a really good ore body with potentially good cost structure. My choice when I came in here in 2009 was to go and look at something like Pan African Resources. It had been completely forgotten, and you could pick that up at 75 cents to 90 cents.
Now at above 2.20, I think if we get the graph up there, we'll probably see it.
Yeah, so it's done really well.
So let's get Pan African up, if you guys can do that.
But Bruce, aside from Pan, that's been a great performer for you
Yeah.
because it's done 4 times. But you've got another big holding in gold in your portfolio, and that's Randgold Resources, a company that comes with a different type of risk, but fantastic operation.
Yeah, I think Mark Bristow has done an incredible job when he left South Africa to go and look into Africa.
There we go. Pan
sorry, there's
African Resources.
Pan, and I mean you can see that up until December, that November-December run was excitement with with the Evander acquisition coming in, and I'm extremely positive on what can happen. If you look at South Africa's deeper level operations, then I mean they're buying the Evander complex, and it's essentially operationally it's Kinross. That thing will pay itself back out of cash flows in 2 to 3 years, and it's a 14-year life minimum. Plus, there's projects around there, and it doesn't have quite the same mining problems that Carltonville and the Vaal Reefs sort of area, the Klerksdorp area has. So I'm very comfortable with a PanAf stock.
We mentioned Randgold.
Randgold Resources, yeah. I mean, Mark Bristow has done an incredible job. He's gone out there, he's got a team of good geologists, they can find things, and they know how to develop. So the track record is there. I've seldom seen Mark express himself so positively in his latest little short letter to the market, because prices are so low, market caps are so low. He sees this as a great opportunity. Other very, very good teams have done great work in Africa, not recognized by the market, and he's already signaled loud and clear that he's going to do some M&A work. So, trying to second guess what he's going to buy, well, rather just go and buy Randgold Resources.